Hello, Class 12, and welcome to your economics class once again. This is your Nigam sir, and the chapter that we are going to study today is Fiscal Policy. And this is the first video on this chapter. The syllabus from this chapter for ISC are Fiscal Policy, its meaning and instrument, Public Revenue, that is taxes, its meaning and its types, difference between direct taxes and indirect taxes, Public Expenditure, its meaning and importance, Public Debt, its meaning and redemption, and lastly, the meaning of deficit financing. The topic that we are going to study in this video are meaning of fiscal policy and its objectives. So before we move on to this video, let us know what are we going to study today. So we will be studying a new branch of economics, that is public finance. So what do you mean by public finance? What are we going to study in public finance? Public finance is the study of the income and the expenditure of public authorities. So what do you mean by public authorities? Public authorities out here includes all kinds of government ranging from local bodies such as municipality, district boards to state and national governments. So usually these public authorities have to perform different kinds of functions for its people, that is maintenance of law and order, provision of defense and social overheads. Sometimes it also produces goods and services. It undertake investments and promote economic development of the country. So normally the government uses two policies to run its country or to run its government. Understood? These policies are fiscal policy and the monetary policy. So, under fiscal policy, the government usually uses the three instruments, that is, the taxation, public spending, and public borrowing. So, now let us understand what do you mean by public revenue, that is, the taxes. So, public revenue is the income that the government generates, and the government normally generates its income through taxes. So, let us know what do you mean by taxes. The taxes are the compulsory payments to the government without any corresponding direct return of services and goods to the taxpayer by the government. So, tax usually refers to the compulsory payment which the public makes to the government with which it does not receive any corresponding return of goods or services. Okay, so these taxes are income taxes, corporation taxes, wealth taxes. Uh, we also have customs duty and other different types of duties through which the government generates its revenue or its income. Another tool is the public expenditure. So, public expenditure refers to the expenditure incurred by the public authorities for its own maintenance as also for the meeting of collective needs of the citizen and or for promoting their economic and social welfare. So what do you mean by public expenditure? Public expenditure refers to the expenses made by the government to run the country so that it can achieve different economic and social objectives of the country. The third tool that is used by the government is the public debt or public borrowing. So, what do you mean by public debt? Public debt is the debt which the government owns to its subject or to the national of other countries. So, sometimes the government also borrows it from its public, or sometimes the government also borrows from the foreigners and from the international monetary institutions or international financial institutions. So, those borrowings that the government takes from the public or from other sources are known as public debt or public borrowing. Now, we have come to the conclusion. What do you mean by public revenue? That is taxes. We also understood what do you mean by public expenditure, and we also understood the public debt. So now let us know what do you mean by fiscal policy. So, fiscal policy is defined as the policy under which the government uses the instruments of taxation, public spending, and public borrowing to achieve various objectives of economic policy. So, fiscal policy normally is the policy of the government where the government uses all these three instruments, that is, public revenue, public expenditure, and public debt in order to achieve its predetermined objectives. Now, let us know what are the different objectives of fiscal policy. There are altogether six major objectives. They are economic stability, full employment, economic growth, price stability, reduce inequalities of income and wealth, and lastly, attain external equilibrium. Now, let us know each of these objectives in detail. The first objective is to achieve economic stability. So, what do you mean by economic stability? Is it is a situation of maintaining stability in the economy so that there are less fluctuations in the output and the employment level. As we all know, in every economy there are different business cycles. There are phases like booms and depression. These are the extreme phases for the economy. So during boom, what happens? The output and employment level are at very high. So, and on the other hand, on the other extreme level is the recession or depression, where the output and employment falls. So, the main objective of the government is to reduce these fluctuations in the economic activity. So, this is the first objective of fiscal policy. The second one is to achieve full employment. So, what do you mean by full employment? Full employment refers to a situation when all those persons who are willing to work at the existing wage rate are able to get work. So, another objective of the government is also to provide employment opportunities to its people. Okay, those who are willing to work should be able to get the job. So, that situation is known as full employment. So, maintaining full employment in developed countries and creating more job opportunities in developing economies are one of the major objectives of fiscal policies in the world. The third objective of fiscal policy is economic growth. Economic growth is defined as a process whereby the real per capita income of a country increases over a long period of time. So, it is a situation when the country's average income of an individual increases over a long period of time. So whenever there is an increase in average income of an individual, this would imply an improvement in the standard of the living of the people. So this is also another objective of fiscal policy in the country. The fourth objective is price stability. So during the early phases of economic development in developing countries, there are large expenditures that are incurred by the government, which does not increase the production of goods and services. And as a result of that, what happens? There will be an increase in the prices of goods and services, or simply there will be a situation of inflation. So, another major objective of fiscal policy is to control the rise in the prices of goods and services. The fifth feature is to reduce inequalities of income and wealth. Another problem that every developing economies face all over the world is the gap between the rich and the poor on the basis of income and wealth. A majority of people struggle to make both ends meet, while small proportion of people roll in luxuries. So therefore, a welfare state or the welfare oriented government always tries to reduce this gap between the rich and the poor through its fiscal tools. The last objective is to attain external equilibrium. So, external equilibrium out here means to maintain balance in the balance of payment. So, balance of payments is an instrument, or it is a financial instrument which shows the imports and exports of goods and services for a country. So, another objective of the fiscal policy or the government is to maintain the balance between imports and export. Particularly, a situation of deficit balance of payments is bad for an economy. So, the government always tries to reduce its import over its export. And this is another objective of fiscal policy, to reduce its import and to promote its export. So, in this video, we have studied about the fiscal policy, that we have studied the different tools of fiscal policy, that is taxation, public expenditure, and public borrowing. And we also studied about the different objective of fiscal policy. We have come to the end of this video. Thank you very much for listening and watching the video.